So we've saved the best for last, of course, today. You've heard a lot about data and data policy, I think, sprinkled throughout the day. But for this afternoon, we wanted to take a global look and a look from both the public sector and the private sector at this important new issue in the economy. We have focused a bit on how, as I mentioned, data is secured, shared, utilized. We also have seen different models come to the fore. Europe, of course, led with the regulatory framework in GDPR, and it was accompanied by PSD2, which led to some open banking and data initiatives that many of you have been struggling with and working on for many years. The US saw the development of highly risk-tolerant new startup firms that use screen scraping and other techniques to access new data and really drive the debate here. And in China, we've seen a different model where, again, a very different context of privacy and organization, but highly concentrated data platforms that are delivering fairly amazing new financial services in that market. So this afternoon, we wanted to dive in, and I think that the first issue is really the one that has come to dominate the dialogue, certainly in this market and around the world for the past couple of years, and that's the question of privacy, which is really another byword for data policy. So as privacy has entered the debate, Joe, what is the Banking Committee looking at when we think about privacy policy?
Sure. Thank you. So in the Banking Committee, we have jurisdiction over kind of the financial sector as well as kind of two main statutes, the Gramm-Leach-Bliley Act and the Fair Credit Reporting Act. And this Congress, my boss has been very interested, Chairman Crapo, in kind of exploring not only data privacy, but also security and kind of notification standards. And so we started off this Congress putting out a request for information to the public, seeking feedback on a number of questions. We've received that feedback, and we're starting to kind of explore kind of our next steps. One thing we're looking at in particular is whether kind of the Fair Credit Reporting Act needs to be updated, because there's, in the new digital economy, it seems that there's certain data brokers and other firms that are serving a function similar to what the original credit reporting agencies did. And it seems like there could be some consumer protections there that we need to look to establish. So that's one thing we're looking at right now. Clearly in Congress, there's a number of committees that have various jurisdictions over these issues, and so we're all kind of having discussions to figure out how this would work. Can talk about GDPR a little bit later, but clearly the whole privacy discussion is something that a lot of members of Congress are interested in right now. Last Congress, after the Treasury Department did its FinTech report, we actually found the data aggregation section pretty interesting. We held a hearing in the fall with some data aggregators, kind of got into discussion about screen scraping and found that to be pretty interesting. That's something we're also looking at.
Excellent. And Jessica, we've talked about privacy, but what are some of the other consumer protection issues and/or market issues, things like equal access that Treasury may have been talking about in the report and continues to look at?
Sure. Why don't I start just with a little context of the report itself, since Joe referenced that. So last July, the U.S. Treasury Department published what we called our non-bank financials, FinTech, and Innovation Report. It was the fourth in a series of 4 reports in response to an executive order issued by the president asking the U.S. Treasury to evaluate the way in which we regulate the financial system and make sure that we're pursuing regulations that are within or consistent with a set of core principles. Things like empowering individuals to make their own educated financial decisions, supporting vibrant markets and growth, protecting taxpayers from bailouts, et cetera. I think a set of maybe 8 or 9 of those principles, if I remember correctly. And as we went about that report, we realized that we had to deal with issues of data management, and data security before we could even get into other issues with respect to other non-bank financials and fintech. And in looking at that, the way that we addressed those issues, again, we looked at management and security. We didn't specifically dive into privacy yet. Privacy definitely raises, there are critical questions that are being raised right now about data privacy. Our report really looked at protection and management of that data. So we'll look forward to working with Joe's team going forward on some of the privacy issues. But in looking at how we framed it, you're looking at new business models now that have been enabled as a result of the data that we have in a medium in which we can then analyze it and transfer it and use it. And those new business models, then we need to think about how they're using it, how they're managing the data, and are they doing so in an efficient manner, such as improving digital communications and data sharing, in a responsible manner, making sure that that transfer is secure, and say consumers are able to withdraw authorizations to access their data that they may have previously given. So all of these things, again, speak to that set of core principles that I first mentioned, focusing on growth and empowerment and positive things. So there's a lot of discussion right now around privacy and protection and safeguarding, and we really wanted to look at those positive things. So if you think about data aggregation, there are different kinds of data aggregators, right? We looked at consumer permissioned data aggregators specifically, things that allow a consumer to monitor their finances and see everything all in one location, perhaps, right? Make it much easier for them. At the same time, Treasury recommended that industry move away from less secure practices like screen scraping to more secure sharing practices, but we didn't specifically say how, right? We didn't define how we thought the private sector should go about doing that, as much as recognizing the aspects, so the issues that are not necessarily privacy, but liability, data element standardization, things like that go beyond just those questions, but to say these are the issues that are out there that are perhaps holding us back from moving in the direction that we want to go, and we'd like to see the private sector really lead a solution toward that, which gets to the broader theme throughout the report, which was pursuing regulations that are technology neutral, right? That focus on the objective that we're trying to accomplish and not so much how. Because in a free market system, if you allow the private sector to come to those solutions, I think they can probably best arrive at a good conclusion.
Great. And when we think about, I know at the IF we've been really thinking about how data is shared and aggregated, and there's certain open banking initiatives have kind of driven a one-way street. So when you talk about the ability to aggregate and standards to aggregate, Chris and Rafael, I don't know if either of you had some thoughts on what's being left on the table for better and more inclusive financial services if banks don't have the same ability to reach out and aggregate data to better serve their customers. Anyone want to hop in on that one?
Yeah, I mean, I think this is a fascinating area because it's not just about data, it's about trust as well. And I think data is a trading mechanism, but what's behind it is trust. So some of the things that we feel are important, is kind of what Jessica and Joe were alluding to, is privacy. Also, it's the safety of how that data is transported and how easy it is to access. Definitely, we agree that screen scraping is probably not the best. I mean, APIs should be the way. It's efficient, it's easy to manage, it's secure. You can comply with the right to withdraw permissions. So some of these things are not exactly covered in all of the regulations that we've seen today. But also, I think what we call symmetry is important. And what I mean by that is there's a lot of regulation today that requires banks to provide data in a very streamlined and efficient way, especially in Europe, via APIs, and open that to all of the potential parties that might have customer consent to do so. But there are other industry players that today do not have that piece in place. So we believe there's a symmetric relationship here in some of the regulations, and we would love to see that part of the equation be more be addressed as new regulation comes into play.
I would just add, I think the biggest risk for financial services industry and for the economy more generally is that many companies that do a lot of good with data and the exchange or aggregation of data will become the unintentional victims, the collateral damage of overbroad regulation, particularly on privacy, that is meant to address, frankly, the bad behavior of consumer internet platforms. What we're seeing around the world, just even in the last few days, around content regulation, hate speech, the streaming of online videos, you've got governments. Just last week in Australia, a new law was drafted and passed in 48 hours that essentially holds any company that has online hosting legally responsible for anything that is put on their cloud. And this was meant to go after the tragedy of what happened on Facebook Live in New Zealand with the shooting. And yet when you look at the law and the black and white letter, which is now the law in Australia, it captures vast amounts of the data economy. There's a real risk that the same thing could happen in the US as we consider federal privacy legislation, or as other countries take up content regulation. And so I think for industries like this, and IBM is a big servicer of many people in the financial services industry, our message has to be, that is not us. We, fix the right problem. If the problem is what people post on Facebook Live, or child pornography or hate speech, fix that problem. Don't, with a sledgehammer, destroy all the positive benefits that you could get from what Jessica was just talking about, the financial, the fintech industry, data aggregation, and so forth. I think that's the biggest risk we face in the next year or so.
And that brings us to the next question, which is, a lot of regulation has focused on industry verticals, and that's worked for a very long time. But data, and as you just pointed out, certainly privacy initiatives now cut across the entire economy in a way that's, I think, very difficult for the frameworks that we have in place today to deal with. And you see people wrestling with either carve us out, or again, continue to maintain that industry vertical. And Jessica, I know that's one of the things that Treasury, with the interagency process, tries to take a look at how do things in other verticals impact financial services, and how can you be better coordinated. So what needs to happen, or what are some of the things that we can do to better coordinate these types of policies and better understand their impact across industry? As we said, actions by some digital platforms are driving very broad-based, fast-moving legislation with really some pretty profound implications for an era when everybody agrees data is the thing. So how do we try and coordinate that a little better moving forward?
Yeah, so over the last 2 years, Treasury has really had a pretty open door policy in terms of engagement with stakeholders, as we have looked at how we regulate all of the financial regulators together regulate the financial system, and looked to ways to harmonize that regulation so that we don't have unnecessary or overlapping areas of jurisdiction. And so one thing that we heard from a lot of stakeholders, or a number of stakeholders, was heard uncertainty in terms of just how various firms are regulated for how they manage, use, et cetera, consumer financial data. And U.S. the U.S. does have a pretty clear statutory framework for financial institutions with respect to how they collect, use, and manage that consumer data, so Graham-Leach-Bliley. But for non-financial institutions, say retailers, manufacturers, it's not as clear, and they may be required also to comply with various state laws that are far from uniform, right, across all the different, the 50 different states. So just looking at that as one particular example, where Treasury looked at the concerns around potentials for breaches of people's data or lack of security around data, then Treasury recommended that Congress enact a federal data security and breach notification law, just because we, as consumers, we would like to know and really should know in a timely manner when and how our data has been breached, if so, and look to more of a whole economy approach to something that is that important.
Then just before we move on to the next topic, Chris, Raphael, any thoughts on how data policy might be better coordinated across industries or lost opportunities? Open floor if anybody wants to say anything before we move on to the next topic.
Well, I would just say the idea of a uniform federal standard on data breach notification is something that I think is broadly supported. And yet, those of us in the tech sector have been pushing for that for 10 years, and Congress hasn't been able to get it done, which frankly makes me wonder about whether we're going to be able to develop a consensus in Congress at a federal level on consumer privacy legislation before the end of this year, when what happens in January, the California Consumer Privacy Act comes into force. A law, again, drafted and passed in about a week in order to try to avert an even worse, more prescriptive law that would have been passed by referendum in the California ballot. So it's very possible, if Congress does not come to a consensus, that we will be living with a patchwork of different state laws around consumer privacy that may or may not respect the established precedents that exist, particularly for the financial services industry, right? So there are some sector, financial services, energy, a few others that have fairly clear standards because they have their own regulators. But if you've got California and Washington and Oregon and Massachusetts and Rhode Island, each with their own consumer privacy law, driven by whatever the latest Google or Facebook catastrophe is, well, I worry that we're all going to be grappling a year from now with a very confusing situation in the U.S.
Can I add a quick comment?
Certainly.
Sorry to be so gloomy, but
no, but I mean, if we take what Chris just described and you take it on a global level, I mean, we are a bank that is present in 10 core markets, and we have smaller presence in other 21. So this same problem then becomes exponentially complex because it's not 51 states. We are in the US as well. We need to take, but we need same problem times the number of countries we are present at. So what we have decided is, given that regulation is probably not going to catch up to the standards that we require, again, going back to my trust, fast enough, we came up with our own principles around data and that are to the maximum level that we believe we can obtain, given all the experience that the bank has managing risk. And we see data and privacy as core to our success going forward. So we have said, we're not going to wait for the regulation. We're just setting internal principles that are stronger and even harder to meet than some of the regulation in the countries where we operate because of this problem.
And Joe, some views from the Senate as you look out at this patchwork of state activity?
Yeah, I mean, right now we're trying to figure out what the appropriate standard should be. Clearly, the issue of preemption and kind of enforcement of these standards is one that has proved challenging in the Congress, and hopefully we'll be able to work through that.
Right. So that really set up, and we've already gotten into the next area I wanted us to talk about, which is the long track record that the financial services industry has of really doing probably one of the best jobs across the economy of trying to secure and protect customer data. So Chris, I was wondering, you know, as you mentioned before, have been a trusted partner with many of our member firms and many firms across the industry in building these capabilities to store, aggregate, use, and protect and secure data. So some thoughts about what some of the best practices and standards that the financial services industry maybe should be examples that people look to as they build these national standards.
Well, it's very clear the banking industry has been leading the way with regard to the use, but also the protection and security of data. A good amount of that is because there are laws that require it, but also it's key to this issue of trust, right? The Equifax data breach being an example of what can happen when basically everyone's data is exposed. Imagine if that happens in the context of banking. In terms of best practices, one is that banks have a very sophisticated understanding of technology. And most banks, particularly most large banks, have not rushed headlong into using public cloud services to provide services to customers. They've pursued a mix of both cloud-based but also on-premise-based services. And a good reason for that is security, and another good reason for that is redundancy. So, you know, people say, well, why does IBM still make mainframes? Well, one of the reasons we still make mainframes is because you guys buy them. And you buy encrypted mainframes where data is encrypted even at rest, and you do that because you want the data, you know, in your basement, in your vault, locked up. Do you use the public cloud? Do you put things on the IBM cloud or Amazon Web Services? Of course you do. But that's not where the core of your data resides. It can't because of the nature of the data that you are responsible for. So that's one best practice, you know, understanding the benefits of what we call a hybrid cloud approach. There's always going to be a mix between on-premise data, data in the cloud, and particularly the increased use of pervasive encryption. That's one of the best practices, I think, that is, you know, not as well understood. The Defense Department just announced they're going to spend $10 billion on a single cloud to put highly sensitive military data, which is going to move a lot of things out of on-premise data centers and into the cloud. And this is classified data and so forth. We've advised against that. We've advised against it because we don't think it's the most secure industry standard way to go. And in fact, when we met with DoD to tell them why we thought they were wrong, the examples we used were banks. And I won't mention which ones, but some of them here. And we said, this is how banks, who are the most sophisticated, high-security customers, manage their hybrid clouds. You should follow that model. Doesn't look, unfortunately, like that's the way DoD is going to go, but eventually, maybe they'll see the error of their ways.
So maybe before we move on, Rafael, you've worked both in the tech industry and now at Santander working within a much more constrained environment. What are some of the trade-offs? I know at the IF we look at both the risks and challenges of moving to the cloud, but also the risks of not being able to move to the cloud with an industry that hasn't had the free cash flow that the digital platforms have over the last decade to invest in new technologies, to build the data pools and lakes that they need for AI applications, to meet customer expectations. So Rafael, as you think about it, how do you balance these things, and what are some of those principles that you had mentioned with your third-party relationships that you build?
Yeah. It's very interesting because there's a lot of similarities, but also it's complete different approach. I think one of the biggest differences is the approach to the cloud. I mean, in the tech world, the question between cloud or on-premise, it's not even a question.
Not a question.
It's cloud by default. And companies are comfortable with that, and they're comfortable sharing the data cloud to cloud and very sophisticated ways of doing that. When I was at Intuit, for example, we used to the topic of data aggregation. We wanted to aggregate data. I don't know how many of you guys use QuickBooks or TurboTax, but the ability to provide you with the data that you need if you're a small business at the point of need, it's critical to the success of that company. So we were not only open to share all of our accounting data with other parties, but we were always looking to get as many data as we possibly could. Obviously, it was secure, and we had all of the necessary, but it wasn't a conversation that was front and center. when you bring that back to the banking environment now, I think the bank, Santander, has announced that we want to become a financial services platform. And therefore, the exchange of data is also key to our success. But the approach we're taking is different. To the principles that I were describing is we will not do a deal with any partner if we don't meet the privacy principles that we have set out. We will not do any deal if we don't feel that the transmission and the storage of the data on every aspect of the value chain is secure the way we want it to be, not the way the partner thinks it's secure. And also, we want to make sure that there's, at the tech company, we didn't really care about what we call one-way doors, which is we send the data, but we don't bring anything back. At the bank, we want to make sure that we know what our data is being used, and we know what use of that, because it goes back to putting the customer and the citizen in the middle of that. Because they're giving us permission to share their data, we want to make sure everything that happens with the data, we know what happens. So those are some of the key differences. And of course, as you can imagine, the time you need to get a partnership going on one versus the other is significantly different.
Well, for the next question, we'll pivot to GDPR. As folks in the US have looked at how do we try and pursue some of these objectives that we have in privacy, the EU's general data protection regulation has provided one model that a lot of folks have looked to. And it's a little ironic because having spent a lot of time in Europe, talking to a lot of folks who are working through some of the shortcomings of that model and some of the issues that they've found, I think that as people in this market look for templates or something, as you said, the pace of how some of these things are moving is pretty breakneck. And so as people look for something that they could draw from, that's been a leading example. And so I was wondering if we could, maybe, Joe, start with your thoughts. Is GDPR something that the Banking Committee is looking at here as a template, a model, what you could draw from?
Yeah, I mean, there's been a lot of people talking about GDPR. The broad principles of giving consumers the ability to access what their data is, correct it, in some cases delete it, and kind of moving beyond a pure notice regime is something that there just seems to be a lot of people agreeing with. I think when you step back and kind of get into the question of kind of California or kind of just jurisdictionally in the US, how this would actually work, how are institutions going to comply with it if there's different standards in different jurisdictions is something we're thinking through. And then obviously in the US, we have very different ways that the laws are enforced in the states by either kind of figuring out how to apportion enforcement, whether it be at a federal regulator, state regulators, private right of actions, and so forth. And all of those questions start making this very complicated. But I think at a principle level, people seem to be looking to it a little bit.
And is harmonization something that people have mentioned when you hear about this?
I mean, that seems to be the top kind of point that people want, is they want one standard so they know what it is and so they can comply with it. And I think people are willing to have when we talk to stakeholders, they're open to pretty broad privacy protections for individuals, but they really would like consistency in what that is across jurisdictions and how it's enforced.
So Jessica, as Treasury looks at GDPR, and as you hear back from industry, what are some of the things that you're hearing and some of the things that you might be seeing? And are there some things that might be improved as well?
Mm-hmm. So expanded access to data causes us to start talking about some of these questions when we look at a movement towards a more open banking system than we previously might have had. And that, looking at GDPR, which specifically tries to create a fundamental right to privacy, but specifically to be able to delete and transfer data. When Treasury thought about that in the context of its report, we certainly, as Joe was saying, thought about the principles and the spirit of, giving consumers more control over their data, but came out with a couple of recommendations. One being that, consumers absolutely should be able to revoke prior authorization to access their data, right? Just turn off the spigot. Right? And data aggregators and any other kind of fintech application that's collecting that data absolutely should provide consumers a an easy way for them to revoke that access, to stop. Treasury stopped short of, though, recommending that any kind of deletion. So I'd say that our position is more a position of the right to turn off further access as opposed to the right to be forgotten. Right, and that's the main point that I really try to draw the difference in between GDPR and kind of where our position is with respect to these kinds of rules. I think in terms of looking at what we've heard from a number of companies, there's certainly a national security component in question to the idea of being able to delete existing data, as well as just uncertainty still of exactly how to implement the requirements of GDPR, and particularly if you have customers who are EU, UK customers. So looking at those, I think also the cost and uncertainty about how to operate in jurisdictions with multiple different sets of requirements around that have certainly been raised, potentially adding to issues of barriers to trade or regulatory cooperation, and a potentially concerning trend toward data localization that we've started to see.
And Chris, I think that's a great segue to you. Implementation and becoming fully compliant with GDPR has been a real headache for most industries, and I think that the ability to be truly compliant is actually an open question in some instances. So, what are some of the things that you have? Or that industry is learning as IBM has tried to help implement it, and what are some of the improvements that you might recommend as folks look at that as a template?
Well, our consulting business has made an awful lot of money off of GDPR. It's probably the only business that is making it. Lawyers and consultants are making a lot of money off GDPR. It is, I think the issue, Commissioner Jourova, who's responsible for GDPR from the European Commission, is in Washington today, and there was a meeting with her with some tech industry folks this morning, and yeah, I think there's a lot of convergence, particularly in the last year, between the US and Europe around principles of consumer privacy protection. Some of the things that Jessica just mentioned. Right to know what sort of data is being collected, right to turn that off. Right to deletion is a little more controversial, but there's a lot of convergence around that. And those principles are enshrined in GDPR. And so when people say we should adopt GDPR in the United States, I think what they mean is we should adopt those principles. I don't think they mean we should pick the thing up, photocopy it, and put it into U.S. law, because as is the case with many European regulations, it is prescriptive, it's top-down, it's heavily regulatory. And it hasn't yet accomplished its main goal of harmonizing across the European Union. So just as an example, there are 22 now different standards that have been put out by data protection authorities in Europe for something called data privacy impact assessments. So for any of you who have a background in dealing with environmental impact assessments, this is the same thing in data privacy, and there are now 22 different standards in Europe put out by data protection authorities. The issues around enforcement are also a big difference. I'm not sure we really want to see a private right of action in the United States for people to sue at will to empower the plaintiff's bar if you don't like something that's being collected about you online. There's probably relatively more consensus around things like state attorneys general, or certainly the Federal Trade Commission being an enforcement entity. So I guess if you ask me what are the lessons learned from GDPR, it's that there is convergence now on the basic principles. There wasn't a year ago, by the way. I mean, Cambridge Analytica and a number of the recent things have fundamentally changed the point of view of many companies in Silicon Valley. If you'd asked, 18 months ago, should we have a federal privacy bill, most of them would have said, talk to the hand. Now they're out calling for it, right? And some of them even said, endorse GDPR. What that means is endorse the principles. The architecture around it and the all the filing requirements and all that, I don't think we want to replicate in the U.S. because that's what's driving companies crazy, particularly small companies in Europe, right? The Googles and the Facebooks and the IBMs in the world can pay, tens if not hundreds of millions of dollars to make sure you're complying. If you're a small startup, that's pretty hard. And that's the part of GDPR we do not want to replicate in the US or frankly anywhere else around the world.
Excellent. And that's, I think, a really important point that has come to the fore, is that there are only a handful of companies that can truly probably be fully compliant, and that may become a real damper on innovation. And Rafael, you sit in Silicon Valley for a bank that's headquartered in Madrid. So I think that brings an interesting perspective on maybe the trade-offs that you've seen, and you probably see some things that you might have built in another industry. So we've been talking about arbitrage between different regions in privacy regulation and data policy and what that might do. What are some, any examples of what might be lost if the financial services industry isn't able to use data in a full way?
Yeah, I mean, I think there are so many things that we could probably spend a full hour talking about this, but going back to what I was describing at the beginning is today, not all industries have the same privacy rules to play with. So that limits, at the end of the day, the reason that data is important in the digital economy is because it drives innovation. And if you drive innovation, you can lower costs. And in the case of a financial institution, if I'm able to complement the data that I have of my customers with data that exists in other platforms, I can combine those data and I can potentially lend money at a lower cost more efficiently, which has an impact in the economy because I'm improving financial inclusion, is to get people into the financial system, and so on and so on. Today, we have great ideas of how we could do all of that, but we cannot access the data that is out there unless it's a one-on-one relationship, which is very complicated to do and agree on. If you compare and contrast that with fintechs or startups that are non-regulated, they can do that very easily because they can access data that the banks have. They can build their models, they can hash, and they are benefiting from some of these. So it's very interesting. I think both the bank and the tech industry, we want to put the customer in the middle, the citizen, in everything that we do. In my previous work, a lot of what we spent the time was, how do we solve for what the customer need is? And then we let the lawyers and the privacy officers deal with the data issues. In Santander, 50% of my responsibility is making sure that anything that we're trying to do is meeting our data principles and privacy. So I start with, yeah, this is the customer problem and this is how we solve it, but we put all of those things first. So that obviously, if you go down the funnel of what things you can do, there's limitations on what you can do with both of those models. So that's one of the biggest things I've learned moving from one industry to the other. But I mean, the technology and the security that banks have is really impressed me. And again, going back to what I was describing, it's not only about data, it's about trust. I think the biggest asset that banks have, and we think about that in Santander, is trust. So we don't want to compromise that no matter what.
And those sound like pretty good principles. Put the customer first, and a lot of other things will flow. Make sure that you're building trust in. A lot of other things will flow.
Yeah.
For the last bit, I wanted to turn, maybe to kind of a bigger picture question, and that's the free flow of data in the economy. Japan has put this on the agenda for the G20 meeting coming up this spring, and we see, Europe has one framework and principle that's in place. The U.S. is wrestling with establishing one and heading in a couple of different directions. China has a very different model that is in place, but also delivering some pretty profound results over the last decade for their country. And when you look at markets like Indonesia, India, and across other emerging markets in the world, I think as 5G, IoT, and a lot of other services roll out, these tensions are just going to continue to increase. So as we think about this question of free flow of data, equal access of data, maybe start with you, Jessica, if there are any comments that you might share on how you see trends moving and what maybe the cost of some of this fragmentation might be. We look at it both in the U.S. context, but I think that's very much true at the global level and across industries as well.
Yeah, sure. So in some of these data questions, I often think about them in terms of new competitive technologies that are taking advantage of or enabling even the data to exist. So say artificial intelligence, machine learning, cloud services, all very important technologies to be developed, both to enable new business models as well as expand access to all kinds of services to consumers. But as with any new technology, there are always opportunities for its misuse. And in some of those questions then that get brought up about how it could be misused or where there might be weaknesses in the way in which it's employed, simply because we haven't done a lot of that yet. I think there are tendency is then sometimes to kind of overcorrect too quickly, perhaps. And so in that, I think we're seeing a somewhat concerning trend, as I mentioned, towards data localization, and possibly as a solution to some of those concerns, where there may be data security concerns or other such concerns that could be better dealt with a technological solution or a contract or a bilateral or multilateral agreement, and instead using a very large authority and tool to simply try to solve a problem instead of making sure that we're only solving the issue that we're concerned with, and not causing secondary and tertiary impacts of that. So I'll just give you a quick example. So say a simple example of using your credit card. Say I'm standing on a train station platform in Paris or in Hong Kong or somewhere, and I want to use my U.S. credit card to purchase a train ticket. Right, a fairly simple, we think a simple thing, but oftentimes, or most often in payments, just to cause that single transaction to occur requires the free flow of data. If I'm going to use a U.S. credit card and I'm going to do that somewhere else, there's a free flow of data that goes back and forth to simply make that one transaction occur, right, between the countries. So if we're in an environment where we have heavy data localization requirements, then in order to provide the same level of services that we have today, and not end up decreasing access to services, then companies will need to, say, invest in a lot more local infrastructure in each one of those localities to still provide that service, or may not be able to provide it at all. Right. I don't, that's probably not the best outcome for a growing economy. So hopefully, we'll be able to look at more what the issue is and focus in on that.
Chris, many of the solutions that IBM is building for industry are really focused on those large pools of data and driving AI, machine learning, and other new applications that rely on that data at scale. What are some of your thoughts as you look at this global data policy debate and what the trade-offs might be and the capabilities that you could build for industry?
I'm struck when I meet with government officials together with representatives from our clients, especially from the financial services sector, how they are the first ones to raise concerns about data localization policies. I was in a meeting in New York earlier this week, and a CEO of a large credit card company said, my biggest concern is data localization, and he cited the example of the RBI regulations in India, which require basically all financial data to be located in India and no free flow of data. Imagine what that means to the kind of credit card transaction that Jessica was describing. This is one of the biggest worrisome trends, and the world is breaking down into, sort of three camps. One camp is China and Russia now, and maybe India, which are headed in the direction of essentially trying to completely wall off their data economy for different reasons. In India, I think it's more traditional protectionism driven by domestic telcos and nationalism. You hear these words. Data colonialism is popping up a lot in India. But in China and Russia, it's more around national security and frankly, political control issues. So that's one camp. The second camp is very small developing countries who just don't have any policies whatsoever, and they're trying to figure their way out on this. You know, they just don't know what to do. And the other camp, which I think is hoping and emerging, and with the leadership of the Japanese and the G20, will be those who believe that we need to have international agreements that allow for the free flow of data and data localization that protect privacy. So it doesn't mean you ditch GDPR. You know, the Europeans get upset about that. It means you have rules that allow for this to happen as the general default, unless there's a good reason why the data shouldn't or couldn't move. And that's the way it's breaking down, and we'll see. I don't know which of the three camps is going to win. I know which one I hope does, but we have a lot of work to do. And that's not a tech company issue. That's an issue for any company that deals with data.
Yeah. And I think that's the issue here as we go to a red light and are getting ready to wrap up. But I think the issue and one of our meta messages here is you might hear privacy, you might hear something broad about industry-wide data policy, but the implications for what our industry will be able to do and how we can keep pace and how we can keep a global standard so that global financial services can continue to do its job of intermediating the economy is going to be very tricky to navigate through here. So thank you very much for sharing your thoughts with our crowd this afternoon, and thank you very much for hanging in there with us. A big round of applause for our panel.
Thank you.